Right now, as we look at the live market tape for Strive Inc., ticker symbol ASST, the stock is trading at exactly $1.05. We are seeing a decline of roughly 6.67% on the intraday session, a move that translates to a loss of about 7.5 cents per share. While the broader markets are digesting macroeconomic data, ASST has decoupled and is trading with its own distinct high-velocity personality. The aftermarket data shows a slight tick up, but the primary story here is the pressure we are seeing on the main tape, with the price action aggressively testing the lower bounds of its recent consolidation range. The volume is pouring in and the volatility is spiking, which is exactly what active traders look for, but it is also what terrifies the passive investor. The expectation from the retail gallery right now is that this is a falling knife scenario. You look at the chart, you see the drop from the daily high of $1.09 down to the lows near $1, and the natural human instinct is to assume something is broken. The average investor sees red and assumes the company is in trouble, or that the recent hype cycle has officially popped, leaving bag holders in its wake. There is a pervasive fear on the forums that we are heading back to the 52-week lows of 34 cents. That is the expectation: fear, capitulation, and a slow bleed into irrelevance. But the reality is far more complex and, frankly, far more interesting. What we are witnessing is not necessarily a fundamental collapse of the business, but rather a liquidity flush driven by the company's aggressive shift in business strategy and the mechanics of its recent capital raising. When you look deeper at the order flow, you are not just seeing panic selling, you are seeing a rotation of the shareholder base. Strive Inc. has effectively transformed itself into a leveraged bet on Bitcoin, holding over 7,500 Bitcoin on its balance sheet as of the last disclosures. This drop to $1.05 is tracking the volatility of the underlying crypto asset classes and the digestion of their recent $160 million preferred stock offering. The reality is that ASST is no longer just a tech company. It is a high beta proxy for the cryptocurrency market, and today's price action is a shakeout of those who do not understand the volatility inherent in that model. Let's look at the intraday movement with a magnifying glass. The stock opened at $1.06, pushed up to a high of $1.09 in the opening hour, and then faced a wall of selling pressure that forced it down to a low of $1 flat. That $1 level is critical. It is not just a round number, it is a massive psychological fortress. The fact that the stock bounced off $1 and is currently sitting at $1.05 tells us that there is significant bid absorption happening at that level. Market makers are defending the $1 line, likely because the option open interest at that strike price is massive. If $1 breaks, we enter a price discovery void. But as long as it holds, this 6% drop looks more like a technical backtest of support than a trend reversal. The volume we are seeing today is consistent with institutional churn. We are looking at millions of shares changing hands, far exceeding what you would expect from typical retail capitulation. This suggests that while smaller traders might be getting stopped out, larger entities are likely managing their risk exposure relative to the company's Bitcoin treasury. You have to remember, Strive Inc. has been aggressively issuing preferred stock to buy Bitcoin. This creates a complex dynamic where the equity value is constantly being recalibrated against the spot price of Bitcoin and the dilution impact of the new shares. When you buy ASST at $1.05, you're essentially buying a slice of that 7,500 Bitcoin hoard, plus the operating business, but you're also taking on the execution risk of their management team. This brings us to the elephant in the room: short selling. With a float of this size and a business model dependent on the volatile price of cryptocurrency, ASST is a prime target for short sellers. Currently, we are seeing signs of elevated short interest. When a company issues equity to buy a volatile asset, short sellers often smell blood. They are betting that the company will mismanage their leverage or that the price of Bitcoin will correct, forcing Strive to liquidate holdings at a loss. You need to be checking the cost to borrow fees at your brokerage. If you see those fees spiking above 50 or 60% annualized, it means shares are becoming scarce. That scarcity is a precursor to a potential short squeeze, but it is also what terrifies the passive investor. The price action today, specifically the failure to hold the morning high of $1.09, suggests that there is an active sell program in place, likely algorithmic. These algos are programmed to fade rallies. Every time the stock pops a few cents, they hit the bid, providing liquidity to buyers but capping the upside. This is typical behavior when a stock is in a consolidation via time phase. They are wearing out the patience of the retail holder. The short thesis here is simple. They believe the premium ASST trades at relative to its net asset value is too high. If the stock price disconnects too far from the value of the Bitcoin it holds per share, shorts will hammer it back down to reality. But the counter-argument, and the reason why the reality might exceed expectations, is the potential for a gamma squeeze. Because ASST is a low-priced stock with high volatility, the options market is incredibly active. Traders are piling into call options, betting on a massive spike if Bitcoin rallies. As market makers sell those calls to retail traders, they have to hedge their exposure by buying the underlying stock. If ASST starts to move up, say it breaks back above $1.15, those market makers have to buy more stock to stay delta neutral. This creates a feedback loop that can rip the faces off the short sellers. That is the danger zone we are dancing in right now at $1.05. We are sitting on a powder keg of derivatives exposure. Let's discuss the recent news cycle because it is driving the sentiment. The company recently raised $160 million specifically to buy more Bitcoin. On one hand, this is bullish because it increases the asset base. On the other hand, the market is currently asking, at what cost? If they are diluting shareholders to buy Bitcoin at near all-time highs, the margin for error is slim. The market is currently punishing the stock for this aggression, demanding proof that this capital allocation strategy will actually yield returns in excess of just buying Bitcoin directly. That is why we are down 6% today. It's a show-me move from the market. Now I want to hear from you guys, because the sentiment on this one is incredibly polarized. Comment below how many shares of Strive Inc. you currently hold, and more importantly, do you think this Bitcoin treasury strategy is a genius move for the future, or are they just gambling with shareholder money? I want to see the debate in the comments. Are you buying this dip or cutting your losses? Moving into the actionable analysis, you need to watch the correlation between ASST and the crypto markets. Unlike other stocks that move based on earnings or revenue beats, ASST moves based on the weekend price action of digital assets. If you are holding this stock, you are not an equity investor, you are a crypto proxy trader. You need to be watching the futures markets. If Bitcoin takes a hit, ASST will take a hit, usually with a multiplier effect. If Bitcoin drops 1%, expect ASST to drop 3%. That is the beta we are dealing with. On the technical chart, the level to watch for the rest of the week is clearly $1. If we see a daily close below $1, it opens the door to a test of 85 cents, which is the next major structural support level. However, if the bulls can reclaim $1.10, we could see a rapid move back toward $1.30, which was a previous consolidation zone. The 52-week high of $13.42 seems like a distant memory, and frankly, it's not a useful reference point right now. That price was likely achieved during a period of extreme illiquidity or a reverse split adjustment anomaly. We need to focus on the here and now, which is the battle between $1 and $1.20. There is also the matter of institutional ownership. We saw reports of Vivek Ramaswamy increasing his stake. When an insider or a major figure like that buys, it's usually a vote of confidence in the long-term strategy, despite the short-term pain. Institutional ownership provides a floor. These guys don't day trade. They buy and hold for the thesis to play out over years. If you see filings showing that BlackRock or Vanguard are increasing their passive stakes, or that hedge funds are taking positions, it validates the view that ASST is becoming a legitimate vehicle for institutional crypto exposure, similar to how MicroStrategy is treated. Let's also talk about the fail-to-deliver data. In stocks like ASST, you often see spikes in FTDs, which occurs when short sellers execute a short sale but fail to deliver the borrowed shares in time. This is often a sign of naked shorting or extreme strain in the lending market.
If the FTD numbers start climbing in the next biweekly report, it could signal that the selling pressure we are seeing today is artificial and unsustainable. That would be a massive bullish catalyst, potentially triggering a forced buy-in from the regulators or the clearinghouses. You need to keep your eyes peeled for Reg Show threshold list updates. If ASST lands on that list, things will get very spicy very quickly. We also have to consider the macroeconomic backdrop. The Federal Reserve's interest rate policy plays a huge role here. High interest rates are generally bad for risk assets like Bitcoin and small-cap growth stocks. If rates stay high, the cost of financing that Bitcoin treasury becomes expensive for Strive Inc. They have to pay dividends on their preferred stock. That money has to come from somewhere. If the underlying assets don't appreciate fast enough to cover the cost of capital, the company bleeds value. This is the fundamental bear case, that the carry cost of their strategy